Whether you're buying or selling your home, get the benefit of expertise.
Hey, well, compliments to the show. You're really hitting on the subjects and you're telling the truth. I appreciate you.
Meet the team at dangemis.com. And now, filling in for Dan Gemis, your host, Joyce Blackmere.
Welcome back to the show. Thanks for tuning in with you till 1 o'clock. In studio, I have Lisa Ciparoni and Susan Riem, sales reps with the Dan Gemis team. Hello, ladies.
Hello, hello.
And we have a special guest. We have Ron Bondy, mortgage agent. I almost said special agent. There you go. There's your promotion from the super mortgage team at Dominion Lending, here with his mortgage tip of the week for us. How are you, Ron?
I'm doing fantastic. Thanks for having me on the show, ladies.
Well, we love having you.
Beautiful. So today we are going to discuss transfers and switches versus renewals.
Okay.
So I guess we got to let everybody know what those terms mean in order for us to talk about it. So first, a switch and a transfer. What does that mean? So those are the same thing, just different terms that different institutes use. So a switch and a transfer is when you move your mortgage from one institute to another with the same amortization that's left and the same amount of money without adding additional funds. Now, and then a renewal is when you stay at the institute you are at and you just sign and renew your mortgage. So what's the benefit of switching it? So if you look at, let's look at somebody who signed up for a 5-year term and their term is up right now. Now, if you look at the appreciation on the house in those last 5 years, it went up quite a bit, right? So when you go to if you're going to go switch it, because other institutes have insurable rates, which are lower rates, with different loan to values. So if, let's say, because your house appreciated so much, you originally put 80% down and now, your loan to value is at 65, you would qualify for a better rate at possibly at a different institute. So it's always good, instead of just signing a renewal, to come and talk to your mortgage agent, talk to your financial advisor, and see if you can qualify for a better rate just because of the equity you have in your house.
And sometimes, Ron, it's sometimes people have been with their lender for years and years and years, and they might get complacent and think, oh, you know what, they'll just renew with us because they always do. If it's you should always have two options on everything. And so I think that's great advice.
Right, exactly. Your point is spot on. Your lender wants to make money off you, and so does all lenders. Let's be quite frank there. They're not in the business of giving free money. So it's always good to get a second opinion. I know, right? I would like some free money.
Well, that's wonderful.
Always good to get a second opinion, and I always put it this way: a phone call could save you thousands. Is it worth one phone call?
Exactly.
Yeah, that's good. That's really true, though, right? Like we're always in the habit of giving options to our clients, whether they're buying or selling, for all different scenarios. So to make sure that you don't skip this important step once you're in your home is good.
And
advice.
prepayment options differ, right, Ron, between lenders. So,
Correct.
You might be in a different situation. Like some people might be starting a family, so they might need to, plan for lower payments or original payments, but then maybe when they go back to work, then they can, double down or increase by 10%. So there's different options. So that's, if that alone is a good reason for you to, to source it or to call your lender. Mm-hmm. Yeah, I think, I don't know.
If you want to take advantage of your prepayment options and you look at that it's night and day difference lender to lender. Like some lenders are, like you just said, 10%, and that seems to be what people are accustomed to. But some lenders go all the way up to 20%. So if you're in a position where you can put 20% down and save that interest weekly, monthly, like that's huge. That's huge to have the opportunity to put 20% down. So
Are
when
there
you're-
any
when you're
other terms or things that people should be looking at or considering when they're making this decision, Ron?
So I just wanted to point out, first of all, so the downfall to switching compared to just renewing is you have to requalify for your mortgage. So you have to provide all your income docs and whatever. But when you renew, all you have to do is just sign your name. So that's why you see a lot of people that are complacent and they're like, okay, I'll just renew. That way I don't have to, get all the paperwork. But let's be honest, it only really takes you about an hour to get all that paperwork together. Now, would you spend an hour if I were to say, hey, give me an hour and I'll give you $5,000? Would you agree to that?
Yes.
Yes.
I jump at it.
Yes, I think anybody would, but you'd be surprised. Some people don't. They're just like, yeah, it's not worth it. Okay. Well, I don't know. I wouldn't. Myself, if I see a loony as I'm walking down the road, I pick it up. I don't walk over it. So maybe that's just me. But yeah, so when you're looking at possibly transferring your mortgage or switching your mortgage, you want to look at what are the prepayment options, like you guys said. What rate can you offer me? Can you offer me an insurable rate? That's a big key word to ask, because insurable rates are cheaper than conventional rates, and not all lending institutes offer insurable rates. So that's a big key question that people should ask, and that will determine how much money they can save when they're looking into this. Now, if they want to re-extend their mortgage, well, then that's different. That's no longer a switch or a transfer. That's a refinance. So then the rates aren't as good.
Right.
Yeah,
and there's some great opportunities for people to save money, or just to get that breathing space, because everything, as we all know, lettuce is more expensive than the eggs, right? Or but that gives you that opportunity to say, okay, if I could save, I don't know, whatever, $100 a week or $200 a month or whatever that number is to you, that might just help you sleep better at night. And everyone's feeling the pinch with groceries too.
Yeah. Oh, definitely.
Yeah,
yeah, that's a really good point, to be able to open up some cash flow, for sure.
And it's also good, so like repayment options, like you guys said, that's actually a big one to look at, especially like if you're just starting a job and you know that your job in 5 years, you're going to make double what you're making now, or in 2 years or 3 years, then, maybe you're not taking advantage of the prepayment options now, but in 2 to 3 years, maybe you are going to, because you're going to have extra cash that you're going to want to put down and beat down your mortgage and save those interests.
Ron, what's your thought on people going into a 3-year term right now? For example, a shorter term.
So right now, it's kind of different right now. You can get a 5-year term with some lenders pretty cheap, and the 2 to 3 year are actually more expensive than the 5 year. And well, obviously they kind of want you to do that because they're forecasting that rates are going to come down in 3 years. So they kind of want they want to incentivize you to take the 5-year rate, which is cheaper, but you're going to be locked in for longer. But if you look at what you're overpaying on the 3 year compared to what you're underpaying on the 5 year, it kind of works out with the math at the end of both terms. But it's just the big question mark is where we're going to be in 3 years, where we're going to be in 5 years.
Sure.
So if in 3 years the rate's lower, well, then you're going to make out better because your next 2 years that you would have been locked in at are cheaper. But
awesome.
What you're going to pay in interest over the 3 years, what you're going to pay interest over the 5 years, it's basically going to wash out because you're locking in at a higher rate for 3 years.
Gotcha. Wow, great. Thank you so much for the tips and your advice, Ron. It's always great to have you on the show. We do need to go for a quick break, but when we come back, we're going to give away some a $50 gift card for the Richmond Popcorn Company in Amherstburg. If you want a chance to win, this is it. Text your full name and today's keyword movie to 10800. And also, when we get back, we are going to have our featured business segment of the week. Ron, thanks very much. Ladies, thank you. And we'll be right back on the Dan Gemis Real Estate Show.